What is up? Here's how I lost 1 hour trading NQ today. Today was a Monday and the weekly candle opened right here. It opened within a sort of daily C4, right? So it is lower probability. Why? Because you could create a future gap here, and also it's a Monday, so it doesn't really need to expand all the way to this previous week high necessarily today because you haven't established anything relevant intra-week yet, right? So I already acknowledged this coming to the day that it's slightly lower probable, but I liked what I saw, so I took it. If we drop down, we can see that we don't have an established low of day whatsoever, right? Because it didn't trade into anything relevant. It just opened within this sort of drifting phase of price higher. On YM, we opened up within a consolidation as well, right? This being the weekly open on YM. As you can see, we're opening within these 4-hour inside bars, as you can see here. So you're waiting for something relevant to get manipulated. Where are the relevant key levels? Well, for this profile, since you didn't create a gap or anything, and you opened high without establishing anything, your only relevant level is current low of day for longs. So I marked that out as my refined key level, and I'll only be interested in longs if we trade into this, get our S&T sequence, and just print the true reversal here. So when you drop down to the lower time frame on NQ, you can see that we put in these equal highs here, which didn't get S&T'd on any pair, I believe. Yeah, exactly. So you put in equal highs, and you start retracing lower. And yes, it was like decently aggressive. Like if it would be a ideal retracement, it wouldn't be so aggressive. It would be more like this, right? Where you go where it takes a lot of candles to go lower, but we slightly expand, as you can see here, but we hit that current low of day target, that key level. So here I had an alert set and I was instantly just looking for an S&T sequence to take us higher. Now the current 4-hour candle has an enormous wick, so you have to position yourself lower in the reversal, otherwise you might get cooked trading like a universal sequence up here. So that's exactly what I was looking for. If you look at how these 30-minute candle closed, it wasn't ideal whatsoever. Because you do not want it to be an expansion candle. However, it's still fine because on this is actually prior to 9:30, we ended up printing a two-stage in the form of a strength switch and a PSP. Like that is just so good to see. Like there's nothing better than this, to be real, like genuine. So when you drop down to the lower time frames, you want to see a clean reversal signature, and this is what we got until here. I actually entered right here since YM. I actually printed that strength switch. So I was already tender. I didn't need to wait for a candle close since this was a two-stage in the form of a strength switch, which allows you to trade away from this failure swing. So I just took it right here on this close, and I had my stops here, or actually like just a bit higher to save some R because I entered with one con and the risk was a bit too much. That's my mistake. And I had my stop there pretty confidently because we actually tapped EQ, so you could argue that this is a new protected swing. So upon entering here, if we let it play out, I get stopped. But then on ES, prior to open, you print this strength switch with the strength switch PSP as well. So two-stage PSP in the form of a strength switch prior to open. So once I saw that and I saw us rejecting, I didn't want to wait for open because open could have very easily could have done this or just ripped and didn't need to fill you at the CSD. So I just entered like right here. I was chill with it and had my stop here. Or no, wait, I had my stop, I think, right here. Yeah, at where the strength adjustment T gets invalidated, which I thought was a good stop loss placement. Essentially at the low, and you're anticipating 9:30 to expand. You're entering a positional entry pre-driver, where you confirm it via manipulation prior to the driver, so the driver just needs to do one job, and that is to expand. I had my TP set at these equal highs for a nice 6R or something. And the reason for TP being here is because when you're trading a delayed protraction, you cannot expand. You cannot like expect the candle to expand very past the current high of day in a bullish scenario, of course, because you already have a large wick. If you look on the daily, you already have a large wick, you wasted a lot of time in the range, so you're probably not gonna flip this candle into like a huge expansion candle. So that's why I had my TP at those equal highs, and I thought that like that was clean. I was just like confident in taking this. So after open, we just like expand on all pairs, especially on ES here, which you couldn't have really anticipated since it was the weaker asset prior to open. But you could argue that it was closer to the drawn liquidity. I don't know. Let me check. If the draw is here, the model draw is here. Let's see. It was a bit closer, like purely off eyeballing it, but I still would have taken NQ just because of how strong it was. But you could have also like waited for ES to CSD because it had a pretty nice CSD level. So you could have gotten filled here. You could have gotten like a 3-minute closure here, stops here, and then target the current high of the day. So you could get reasonable R. So if you waited for that, good for you. I would personally wait for a gap here since the CSD is just too high up and I just entered the gap, but we don't get it. So if you traded ES, then like great. You notice that off open it was the strongest asset and you took the gap. That's fine. I entered positional on NQ and we just end up chopping around and then like just melting through and stopping me out. But I thought that loss was valid, so I don't have any issues with it. And yeah, like if we were gonna be bullish, if the bias was gonna play out, this is essentially the late projection profile, then we would have 930 would have pumped here. So I positioned myself pretty well, I would say. And yeah, and that's just, in my opinion, a statistical loss. And for the rest of the day, yes, actually hits that. So that's pretty cooked that I didn't take yes, but you couldn't have really known that. And I also wouldn't re-enter because we didn't form the gap on this 3-minute. You know, if we end up printing something like this like a 3-minute gap right here paired with the CSD, I would instantly limit this, like instantly, because it's closer to the draw. It's the asset that's expanding the most, which is not that typical for ES to be the strongest or weakest asset. But when it is, actually, this is a little gem. When ES is the strongest or weakest asset, it typically means that one of the assets is manipulating, whether that be NQ, ES, or YM. Most of the time, it's NQ or YM. So that's like a little gem. When ES switches to the leading asset at a key level, you can expect that to be manipulation. But anyways, if we ended up forming this 3-minute gap, I would have taken it like instantly, but that didn't happen at all. I don't know why Price did this. I guess we didn't want to be as bullish as I wanted us to be because it was a Monday, and we ended up, if you skip to current price, like we ended up forming a daily gap. So my eyes are like for Tuesday, my eyes are gonna be on this because it essentially is a intra candle like engineered key level for continuation. So you want to see something like this, maybe S&T sequence here or via 2-stage on the 4-hour, 6-hour, whatever, and then to trade here because I'm viewing this move as a true reversal for 2 reasons. First of all, you have an S&T sequence here, you have a closure, and you do expand even though it's not ideal. The driver is like does expand, but then you consolidate, which is a continuation signature. The second reason being is that we failed to manipulate this internal high, which was the high, the most prominent high internal to the overall model, and the overall model is a daily internal to external model. Here's internal, here's external, the previous week high, which is also very likely of getting hit since previous week expanded. Now I do know that the conditions are pretty low prob. As you can see, trading the week after we already expanded like this is not that great, but that is also why I am not expecting price to expand very far past this previous week's high without getting a new phase of price, so I won't be longing above this. But yeah, this is essentially going to be the refined key level for tomorrow. If we disrespect it, well, then we're just consolidating, right, within this range. If we don't reverse out here early on the day, since we're opening within close proximity, then we're just consolidating and wait for a new sequence. But here on YM, I'm actually favoring shorts more because of the phase of price. If you look at the phase of price, it's a clean V shape. Clean V shape here, shallow retracement, not even reaching EQ, clean expansion, very aggressive, very one-sided, into consolidation. So that's some A plus reversal signatures right here. So if YM ends up failing to manipulate this low, which is the consolidation low, or you could even argue that this, because there is a daily and sidebar, well, then you could look for shorts or ES to catch up or anything like that. But at that point, we're just going to be consolidating within this range and it's going to be pretty chopped. But if we want to have a high probability trade, it's going to be this daily universal sequence to target previous week's high. So yeah, that's essentially my recap, and I hope we all learned something from it.